Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be talking about MSTY again, right? But this time we're going to do it a little bit differently. From the previous retirement videos, I just used the inception price, but this time I'm going to use 52-week highs as our purchase point. I'm going to use two different 52-week highs that MSTY has hit over the last 10 months, 11 months of trading, and then we're going to use that into our data, and I'm going to bring up one more consideration, right? But as you guys can see, the distribution rate that yieldmax is advertising for MSTY is about 99.76%, right? We're going to see if we come anywhere near that number. So let's go over to Robinhood real quick. All right, now that Robinhood is on the screen, we're going to look at two different spikes, right? So the first spike we're going to look at is a 44.90. So we're going to annotate that into our spreadsheet. And then for this other spike on November 20th, it was at $44.40. So those are the two spikes I'm going to analyze and come up with different data points. Also, I'm going to make a third data point that's going to use the 44.90 52-week high, and then we're going to calculate it as if the current share price were at $19.07, right? So my first two calculations, I'm using these two spikes of the 52-week highs, but we're going to calculate it with whatever the share price is at this moment. So, you know, 29.87 or 29.83. So we're going to figure out the numbers within that range. But then for my third calculation, we're going to use the highest 50. So basically we're using the highest high and the lowest low, and then we're going to see what those numbers look like. So just to kind of give a couple of different angles of data. So now the best part, let's go to the spreadsheet and nerd out. All right, so let's talk about that first data point, right? So we're going to be talking about FOMO 1, so fear of missing out. Whenever I see these huge spikes in share price, that's usually because people are trying to jump in and buy in on them, and they're not necessarily thinking about, hey, this might not be an opportune time to buy. They're just excited to see all of the share price go up. And then with the share price go up, they might buy in an inopportune time. So, right, so let's assume that we did that. You know, we bought at $44.90. During that time, that 44.90 crested that first one in March 27th, but the first premium payment started in April. Okay, so then of these premium payments, there's about 10 of them. That total distribution is about $29.78. And so if we divided that by the amount of months that was distributing, so we divided by 10. So the net monthly average is you're going to get about $2.90 per share, per MSTY share, you know? And if we do that over a 10-month period, we just look at the percentage, it's about 66.35%. But then now I have a couple of estimates here. So basically I took this 2.97 and multiplied it by 12 because there's 12 months in a year. And so we came up with a total premium estimate of $35.74. And then if we look at the actual distribution rate of that premium, it's about 79.62%. But let's look at what the NAV erosion is going to look like, right? So if we bought in at $44.90, right, and the current share price is trading around, what was it, $29.83, that's technically about a $15.03 loss, right? And so the way I calculate this in my videos is because NAV erosion, because you're getting such a high premium from yieldmax, you have to reinvest or pull some of that money aside so that you don't lose your initial investment, right? So if we anticipate retiring on this, we don't really want to reinvest into it, but for you to not lose your initial investment, you might have to do that, right? So either pull that money off the side or you reinvest it so that you can get more shares and they make more premium and kind of continue that wheel strategy, right? But with everything taken into consideration, so the way I do this is I take this NAV, the share price that was lost, the capital erosion, you know, net asset value erosion. I basically subtracted this $15.03 from the actual distribution, right? So if we look at how much NAV erosion as a percentage, basically the share price going down, it was basically going down, you know, 33.47%. You're down 33%. Okay, now we got the negative part of it. What does it look like when the dust settles and it's the end of the day, right? End of the day, you are still, if you calculate NAV erosion, you're still getting a net premium of $20.72, right? Which is a distribution rate of 46.15%. So that's pretty good, right? So now let's look at FOMO level number 2. So FOMO number 2 is the second highest spike that MSTY had, and that was November 20th. So that spike was about $44.40. And from November until today, there's 3 distribution payments, right? And of those 3 distribution payments, that totaled about $9.78 in total distribution, right? If you divide that total distribution by the number of months that elapsed, so that was 3, the average monthly payment for if you bought in at $44.40 is about $3.26 per share, right? And if you look at that as a yield, that's about 22%. But now let's come up with the 12-month estimates. So to come up with the 12-month estimates, we took this $3.26 distribution and we just multiplied it by 12 to then get $39.12 of premium per MSTY share. And if you look at that at a distribution rate, that's about 88.12%. That's pretty good, right? And from that time, there was a little bit of NAV erosion that was equivalent to the first 52-week spike that was at $44.90. So we still lost about $14.57 with this second spike, right? And if you look at that as a loss percentage, your investment is down 32.82%, right? And then for taxes, we'll go to the charts that I usually make because it's a little more complicated than just giving a flat rate. Okay. Now let's look at the benefit, right? Even though the share price was down about 32.82%, we are still net $24.56 per MSTY share, right? So that is still pretty good. And then if we look at that as a distribution, that is a 55% distribution, 55.31%. That's still pretty good, regardless of, the share price going down. So now let's look at our last data point where we bought in at the $44.90 and then the share price tanked. The lowest annotated mark is $19.07, right? And this was actually, when we bought in at was the entire time that MSTY has been going through, right? So we bought in at $44.90. Right, we had the 10 distribution payments. So some of these numbers are going to look very similar to the first one. So the total premium is the same. The distribution average is supposed to say 10 months. Same total premium, same monthly average, same premium distribution rate, same estimates. Everything stayed the same, except the NAV erosion is going to be different, right? So from that $44.90 investment to then go for the share price to drop down to $19.07, that is a $25.83 loss in share price. So that eroded because of the distribution payments and just the volatility of MSTR that invests into Bitcoin. So if we look at that loss, it's a negative 57.53% loss. Right. And so for the taxes I'm going to talk about in the chart later, but then let's look at the total premium. So we have to pull this, NAV erosion from the share price to come up with the net. The net total premium of the highest high to the lowest low, you're still making $9.92 of distribution per share, right? And if you look at that as a percentage rate, we take this, $9.92, divide that into the $44.90, and then we get 22.09%. So still, you technically haven't lost money. This isn't like a ulty where you have, at the highest high to then the lowest low, you're down 57%, but at least MSTY pays a high enough premium where you're not losing money. So that is the one benefit that this fund has so far, right? Plus the momentum is heading in its way. The next administration that's coming, if you like them or not, they seem to be very pro crypto, and with the pro crypto, Bitcoin might shoot higher and hit the highest it's ever seen, or it could totally crash. Nobody knows. It's crypto, right? They're saying the right thing, so for crypto investors to get excited, right? But now let's look at the charting. I just added that monthly distributions as well because I realized I didn't have that moving forward. So basically for the Fomo 1, the net monthly distribution is going to be $1.72. The net distribution for FOMO 2 is going to be $2.04, and the net distribution of highest high to lowest low is going to be 82 cents per share. So let's start talking about FOMO 1 and discuss these chart details. Right, so as we mentioned earlier, we're going to have a share price of $44.90 for FOMO 1. For a $1,000 investment, that's going to be 22.27 shares. Monthly income is going to be $38.44. Over a year period, that's going to be $461.47. Because of return of capital considerations, the return of capital is about 50% for MSTY, so that the other 50%, or 49.43% to be exact, has to be taxed at the ordinary income levels. So we have to pay taxes on this $228.10. Because this $228 fits in the $0 to $11,000 mark, we're only going to have to pay 10% in taxes, right? So that's only $22.81. You subtract that from the yearly income, and your take home is $438.66. And so technically that tax rate is only 5.2%. Right. So I'm going to kind of go a little faster instead of talking about the individual taxes. So it's just done per level. So whatever this number is, it fits in this level, and then you tax according to that specific percentage. Right. So let's get into it. So for the $10,000 investment, you're going to own 222.72 shares. The monthly income is going to be $384.41. Over a year period, that $10,000 investment is going to net you $4,614.70. Return of capital considerations, we're only going to have to pay taxes on $2,281.05. And because this $2,000 fits in $11,000, we only have to pay in the 10% bracket, and that's going to be $228.10 of taxes, right? We subtract that from the yearly income, and our net take home after taxes is $4,386.59, and that is still a 5.2% tax rate. Cool. Let's go to the $25,000 investment. Let's maybe zoom in a little bit more. Enhance. Okay, so that is maybe a little bit better, guys. So for that $25,000 investment, we're going to own 556.79 shares over the month period. That's $961.02. Over a year period, that $25,000 is going to net you $11,536.75. Because of return of capital considerations, we're only going to have to pay taxes on $5,702.61. Yep. So because $5,700 goes into $11,000, it's only at the 10% rate. We only have to pay taxes on $570.26. And our take home after taxes is $10,966.49. That is still a 5.2% tax rate. Well, now we're going to the bigger numbers. We're going to $50,000. $50,000 is going to get us about 1,114 shares. That monthly income is going to be $1,922.05. So the yearly income is going to be $23,073.50. Because of return of capital considerations, we only have to pay taxes on $11,405.23, right? We break it down into two different tax brackets. Your total taxes is $1,148. Subtract that from your yearly income, and your take home is $21,924.90. That tax rate is about 5.2, still about 5.2. It's not complicated. Okay, so for a $100,000 investment, you're going to own 2,227 shares of MSTY. That monthly income is going to be $3,844.10 over a year period. That's going to be $46,146.99. Because of the return of capital considerations, we're only going to have to pay taxes on $22,810.46. $22,000 hits two different tax brackets, right? So up until $11,000, we pay 10%. So that's where the 1,100 comes from. Anything outside of that 1,100 that falls in between 44,000, we pay a 12% tax rate. So that total is going to be $1,417.25. The total tax for that that distribution is going to be $2,517.25 after you pull that out of your Yearly, your take home is $43,629.74, and that tax rate's about 5.77%. Lastly, the fun part, the $1 million investment. So for that $1 million investment, you're going to own 22,272 shares. That monthly income is going to be $38,440.98. Over a year period, that's going to be $461,469.93. Because of return of capital considerations, we're only going to have to pay taxes on $228,104.59, right? And we have a couple of tax brackets that this is going to encroach into, right? So we max out 4 tax brackets, and then the remainder is taxed at that 32%. Yeah, so in total for a $1 million investment, you're going to pay $51,825.47 in taxes. And when you subtract that from the yearly income, your take home is $44,644.46. That tax rate is about 12.651. So not too bad. All right, guys. So we talked about FOMO 1. FOMO 2 is going to look pretty similar. The numbers aren't too different. So let's look at the worst case scenario. You buy at the peak, that 52-week peak at $44.90, and then it's going to just shoot down to that $19.07 range. So let's scroll down there. And I guess starting from the left again. So for the $1,000 investment, still 22 shares, because it's still the same share price as the one we just talked about. The monthly income is going to be $18.41, and the yearly income $220.89. Because of return of capital considerations, we only pay taxes on $109.18 because it's in the first tax bracket. We're only paying 10%, so that's $10.92 of taxes, right? Your take home is $209.97, and it's a 5.2% tax rate. Moving on to the $10,000 investment. So for that $10,000 investment, we still have that 222.72 shares. The monthly income is going to be $184.10, and the yearly income is $2,208.86. Because of return of capital considerations, the amount of money we have to pay taxes on is $1,091.84. This $1,000 fits in that first tax bracket, so it's going to be at a 10% rate. And so that's $109.18 of taxes. Take home is $2,099.68, and that tax rate is 5.2%. Beautiful. Right. So for that $25,000 investment, we have 556.79 shares. That monthly income is $460.24. The yearly income is going to be $5,522.16. Because of the return of capital considerations, that's going to be, we have to pay taxes on $2,729.60. Still in that, 10% bracket. So we pay $272.96 in taxes. That's still a 5.2% tax rate. And your net take home after taxes is $5,249.20. All right, guys, we're getting to the bigger ones, getting to the big boys. So $50,000 investment, we still have that 1,114 shares. That monthly income is going to be $920.49. Over a year period, that's $11,044.32. Because of return of capital considerations, we only have to pay taxes on this $5,459.21. The taxes is still in that 10% bracket, so we're going to pay $549.92 of taxes. Take home is about $10,494.40, and the tax rate is about 5.24%. Should be fair enough. Good enough. Cool. So for that $100,000 investment, we own 2,227 shares. That monthly income is going to be $1,840.98. Yearly income, $22,088.64. This still hasn't encroached that 12% bracket. So everything this $10,918 is at a 10% rate. So we only have to pay $1,091.84 in taxes. We subtract that from the yearly income, and our net is $20,996.80 at still a 5.2% tax rate. All right, now the fund number, the $1 million investment. So as earlier, the $1 million investment is going to lead us to owning 22,272 shares. The monthly income is about $18,409.80. And over a year period, you're going to net $220,886.41, right? Because of return of capital considerations, we only have to pay taxes on $109,184.15, right? We're going to look at the different amounts of taxes, right? This hits 4 different tax brackets. And this is the amount of money that's going to be taxed at 10%, 12%, 22, 24, I think. Yep, 24%. And for a $1 million investment into MSTY, you're only going to have to pay taxes on $19,604.20. Let's throw some of these numbers into the dividend calculator, right? Yeah, the one I like to use is from Market Beats, right? So we're doing MSTY. As we can see, it's an individual stock. Its distribution frequency is monthly. I'm going to first do no drip because we're not going to be trying to reinvest this money if we don't have to. And it's going to be pretty simple. It's just going to be literally the same number over and over again. So I'm going to just put drip on just for the fun of it, right? Because some of us are not ready for that retirement. So we're going to have to, invest some of this money, and we're going to determine, is this a good investment to prepare for retirement, right? So for this 2,227 share mark, that's for like $100,000 investment. The share price is going to be that $44.90. We're going to put $0 of annual contribution because if we're going to try to live off of this, we don't want to put more money into it. Okay, the dividend tax rate. So the number that we came up with for the highest high and lowest low, that tax rate was about 9.7%. I'm actually going to use the numbers from the previous MSTY video I created, which was a little bit higher. So it was like 15.7 or 15.8. So we're just going to do a nice flat 16 and call it good. All right. This tax exempt, we pretty much already calculated that into the dividend tax rate. So we already got that covered. The initial annual dividend yield was, I think it was $22.09. Let me verify that. Yes, 22.09%. So that's good there. So we're going to expect a 0% annual appreciation. Technically it's decreasing, but if this calculator, for whatever reason, if you put a negative number, it's going to freak out. I can show you, but I don't want to use the Lord's name in vain again. And then the expected annual share price appreciation, we're just going to put 0. Just keep everything simple and do like a nice 20-year calculation, right? So let's see if this makes sense. So that first year, your new balance after all things taken into consideration, it's going to be $120,000. And then as the years go by, the distribution slowly starts getting bigger and bigger. And if you were to do this, have a $100,000 investment and then, reinvest every single premium, your eventual annual dividend yield would be about $770,000, which seems to be wild. But the thing is, we don't even know if Bitcoin's going to be around for that long. Some will say yes, some will say no. But I think after that 10-year mark, that's when quantum computers are going to probably start becoming a problem, that 10, 15-year mark. So I don't know if we'll ever get to that price point, especially for Bitcoin or MSTY. So we'll see what plays out. Well, just for the fun of it, let's look at the $1 million investment because a man can dream. So let's hit that 2 in there, calculate it, and look at the numbers, right? So your annual dividend yield was pretty much spot on, kind of what we came up with. But then after, 20 years of reinvesting everything, you're going to have an annual dividend yield of about $7,703,437.11. That's wild. And then your ending balance for the fund, it's going to be about $42 million. Yeah, guys, that wraps up the video. Let me know what you think. This is the closest thing I can think of to the worst case scenario when somebody can invest into these funds. I'm going to start incorporating this little bit of data into my retire on series, where I pretty much choose a fund and I just discuss what would retirement look like if you don't reinvest all of the premium. So we're going to look at it at a face value, but then also at the end, we usually like to have fun. So I'm thinking the next couple of videos I'm going to make is one's going to be for Cony, one's going to be for nvdy. I'm also coming up with a video for yieldmax prospectus change. So we're going to take a look at, I'm going to look at 3 specific funds. I'm going to look at ymax, ymag, and ulty to see after the prospectus change. We're going to use October 1st as like a data point. Has it gotten better? But yeah, so those are the videos that are coming down the pipe. Hope you guys enjoyed this one. Let me know what you think in the comment section. I hope you guys like, subscribe, and do all the things, because I hope to grow this community so that we can all, bounce ideas off each other. But yeah, hope you guys enjoy your journey out there. Have fun. I'll see you again. Matt out.